Some big economic news. Canada's annual inflation rate fell to 1.8% in December. Grocery and restaurant prices, alcohol sales, and slightly lower housing costs all contributed to the drop. Well, let's dive deeper into those numbers with our business analyst, Kris McCusker. Hello, Kris.
Hello, how are you?
Awesome. Thanks for joining us. So, Kris,
good.
Policymakers have long been aiming to get inflation under the 2% mark, but there are some major asterisks to keep in mind here.
Yes, there certainly are. First of all, with this latest reading, the December reading, 1.8%, that was in line with expectations, Cynthia, so that's kind of nice. The other thing that is of note here, this means for the first time since 2019, the inflation reading stayed within the central bank's target range for a full year. It also marked a second straight monthly drop, down from 1.9% in November. But that asterisk, yes, a GST holiday made a difference here. The reading would have been 2.3% without that break.
Okay, so Kris, the big question is whether this will lead to another interest rate cut, and one potentially is on the way.
Yes, we are very likely to see a quarter-point cut next Wednesday. So 1 week from tomorrow, there's a better than 80% chance as it stands right now. But beyond that, really all bets are off. The next announcement is March the 12th. A lot can happen between now and then. Hopefully, we'll have more clarity on the Trump tariffs by then. Those tariffs, by the way, could add to inflation, in particular if Canada retaliates, as has been the talk. So a lot of moving parts.
A lot of uncertainty, and it really, if those tariffs do come in, that could have a big impact on the markets.
It certainly could, and it's going to be interesting to see how that plays out, because there was a bit of relief. Markets moved higher, given that the tariffs are not in place yet. Just a little delay was enough to drive markets higher today.
All right. Well, Kris, thanks for joining us. Much appreciated.